You are trying to get approved for something. Maybe it is an apartment, a car, or a credit card with a decent limit. And whoever is reviewing your application looks at your file and says the same thing every single time. There is not enough history here. And you sit there thinking, okay, but how am I supposed to build history if nobody will give me the chance to start? That is the credit paradox. You cannot get credit without credit. And nobody teaches you how to break out of it until today. My name is Guy, and I spend way too much time thinking about what it actually takes to build credit from zero when the entire system seems designed to keep you out. If you are someone with no credit history at all, a thin file, or you are young and just starting out and have no idea where to begin, make sure you hit the subscribe button and give this video a thumbs up if it helps you out. Let me start with something that might actually make you feel better. Not having a credit score does not mean you have a bad credit score. A lot of people do not realize this. When you have no credit history, you do not start at 300, the lowest possible FICO score. You simply do not have a score at all. The slate is completely blank. And a blank slate is a lot easier to work with than a damaged one. Here is what most people do not realize. According to updated data from the Consumer Financial Protection Bureau, approximately 7 million Americans had no credit record at all as of 2020. An additional 25.3 million had credit records that were considered unscorable, meaning not enough activity to generate a number. And if you are between the ages of 18 and 19, the CFPB found that more than 80% of people in that age group fall into this category. So if this is you, you are not behind. You are exactly where most people your age are. The difference is that you are here trying to understand the system instead of ignoring it. Now, here is the first thing you need to understand. According to FICO, you need at least one credit account that has been open for 6 months or more, and at least one account that has been actively reporting to the bureaus within the last 6 months to generate your first FICO score. That is it. 6 months of activity. That is the minimum bar to get a score in the system. Once you cross that threshold, the clock starts working in your favor. So how do you open that first account when nobody wants to give you one? This is where the strategy begins. And there are 3 main routes you can take depending on your situation. Route 1. The secured credit card. A secured credit card works exactly like a regular credit card, except you put down a cash deposit up front, and that deposit becomes your credit limit. You deposit $200, you get a $200 credit limit. The card issuer is not taking any real risk because your money is already sitting there as collateral. That is why these cards are significantly easier to get approved for, regardless of your credit history. According to Bankrate data, people with thin or no credit are about 46% more likely to get approved for a secured card than an unsecured card for bad credit. Now, you might be thinking, why would I give the bank my own money just to borrow it back? And that is a totally fair question. Here is the answer. You are not really borrowing your money. You are paying a small fee to use the card as a credit building tool. The card issuer reports your activity to the 3 major credit bureaus every month: Equifax, Experian, and TransUnion. Every on-time payment gets recorded, every month of low utilization gets recorded, and over time, that history adds up to a real score that opens real doors. One important detail. The average APR on a secured card is around 23%, according to a 2024 lending tree analysis. That means if you carry a balance, it gets expensive very quickly. The strategy here is simple. Use the card for one small recurring purchase each month, something like a streaming subscription or a tank of gas, and then pay the full balance off before the due date, every single month. You never pay interest, and you build perfect payment history at the same time. If you want to minimize the interest rate risk, look at credit union secured cards. Federal credit unions are legally capped at 18% APR. That is the ceiling. So if cost is a concern, a credit union is worth checking out first. Route 2. The credit builder loan. A credit builder loan is a product offered mainly by credit unions and community banks, and it works differently from any loan you have probably heard of. Instead of receiving money up front, the lender deposits a small amount, usually between $300 and $1,000, into a locked savings account. You then make monthly payments toward that balance over a set period, usually 6 to 24 months. Each payment gets reported to the credit bureaus. When the loan term ends, you receive the full amount back minus any fees or interest. You essentially paid yourself into a savings account while simultaneously building a credit history. The credit building and the saving happen at the same time. This is where it gets really interesting because a credit builder loan does something a secured card cannot do on its own. It adds an installment account to your credit profile. Remember the credit mix factor, which makes up 10% of your FICO score. Having both a revolving account like a credit card and an installment account like a loan, even a small one, signals to scoring models that you can handle different types of credit responsibly. That combination builds a more complete profile faster than either product alone. Route 3, becoming an authorized user. This is the most powerful shortcut in the entire credit building playbook, and most people either do not know about it or do not use it properly. If you have a parent, sibling, spouse, or trusted friend who has a credit card with a long, positive history and low utilization, ask them to add you as an authorized user on that account. Once they do, that account and its full history can begin appearing on your credit report. You do not even need to receive a physical card or use it at all. You just need to be listed on the account. Here is the math. If someone adds you as an authorized user on a card they have had for 5 years with a $5,000 limit and a consistently low balance, that history could transfer directly to your report. Suddenly, your credit file shows 5 years of positive history instead of 0. That can significantly accelerate how fast you get a score and how healthy that score looks from day one. Now, you might be thinking, what if I do not have anyone with good credit to ask? That is a real concern and it is fair. In that case, your best path is combining Route 1 and Route 2. Open a secured card and a credit builder loan at the same time, make consistent on-time payments for 6 months, and your score will begin to emerge naturally. Let me give you a realistic picture of the timeline. Based on data from FICO, Experian, and advisors, here is what you can generally expect. Within 6 months of opening your first account and maintaining good habits, you will likely have your first FICO score. Within 1 to 2 years of consistent on-time payments and low utilization, you can reasonably expect to reach a fair to good score in the range of 650 to 700. Reaching a genuinely strong score in the 740 and above range typically takes several years of sustained responsible behavior. There are no shortcuts to that level, but the foundation you build in year 1 matters enormously. Get it right from the start, and every year after that gets easier. Here is what you need to keep in mind through all of this. The psychological side of building credit is just as important as the mechanical side. When you first start, the temptation is to open a bunch of accounts quickly because you think more accounts means more credit building. That is the wrong approach. Every new application triggers a hard inquiry, which can drop your score temporarily. And too many new accounts in a short period actually signals financial stress to lenders rather than financial health. Start with 1 or 2 products, build them well, and be patient. Patience here is not passive, it is the strategy. So here is your action plan starting today. First, decide which route fits your situation best. Secured card, credit builder loan, authorized user, or a combination. Second, make sure whatever account you open reports to all 3 major credit bureaus: Equifax, Experian, and TransUnion. Not all products do this, so confirm before you commit. Third, set up autopay immediately so you never miss a payment date. Fourth, Keep your utilization on any revolving accounts below 30% and aim for under 10% whenever possible. And fifth, check your credit report every few months at annualcreditreport.com to make sure everything is reporting correctly. That is it. No tricks, no gimmicks, just a clear starting point and consistent habits applied over time. Drop a comment below and tell me where you are starting from. Are you at zero, or do you have a thin file you are trying to build out? I read every comment. Subscribe if you have not already, and I will see you in the next video. Your history starts today. Make it count